Welcome to Markets Now. I'm Michelle Rook along with Kevin Duling with KD Investors. And we're seeing mostly lower prices in grain and livestock futures this morning. And Kevin, some of this is reflection of the outside markets, which are kind of reacting to the jobs report that was out this morning, right?
Right. It came in better than expected. And so what you're looking at is, the implication of rates perhaps having to increase more, higher for longer. You've got a lot of people in the commodity space expecting rates to start easing off in 2 to 3 months. And if we keep seeing reports like this, then that's probably not going to be the case. And it just pushes the easing down the road farther. So it pushes pressure on all the commodities. And, we'll see how big of a macro sell day this is. It doesn't look that bad to me. Corn's down 3 or 4, soybeans down 7. Hopefully it's not a complete wash like we had last Friday.
Oh, no doubt. But the corn market had a really nice technical close yesterday, and that chart's looking really good. So it'd be nice to see some follow through going into the end of the week here, wouldn't it?
It would. We're right under $5. It'd sure be nice to get over that, close over that for the week. I don't know if we can do that today if the macros stay like they are with the pressure, but that corn chart looks really good. It's got a nice kind of a bowl shaped pattern on the last month or two. I've seen that pattern fail before, but the odds are good that it's going to be able to break above and get over $5. Might not be till next week, but it looks favorable to me. So for sure.
Kevin, how surprised have you been about that? Just because, there's all this talk of this 2.2 billion bushel carryover, and still we have been rallying in the face of that.
Well, I think there's a lot of relief on the domestic demand side, and there's a lot of people buying corn. And then at the same time, domestically, the export market is secondary. And the producer, has been worried about the harvest. They're not sure what they're going to find. The harvest reports are mixed. They're variable. And so, it says 2.2, USDA says that, but like I say, they've been running 300 to 400 high, in my opinion, most of the last couple of years. And so when I look at corn, it's like, well, it's this price cheap enough, the way the inputs are and the way the demand is, and it's, to me, it looks favorable.
Yeah, and exports have been doing a little bit better here to start this new marketing year. What about the wheat market? How much help has corn been getting from wheat, maybe trying to carve out a little bit of a bottom here?
This week, you're just seeing a big realization across the global trade that the wheat stocks are going to be tight enough that people are starting to extend coverage. And so, yesterday was a big day in the wheat market, with everything up around 20 cents. And so that's helping corn, and that pulled corn up double digits as well. You've got Chinese demand, you've got some war rumors, there's a lot of things. I think wheat's going to pull the corn complex up higher all year, I think. So
yeah, and talk a little bit about what kind of spurred the market yesterday. There was some war news that we saw, right?
Initially, it started out with demand, a lot of demand rumors floating around, and then about, I don't know what time exactly, mid-session, a freighter hit a sea mine headed to one of the Ukrainian ports, and there were also strong rumors that Russia was going to mine a lot of that space outside of Ukraine. So it's going to present a major risk, and it's going to slow down any chance of a corridor, and that corridor rumor that was earlier in the week turned out to be false, and so that is a pretty big deal as well.
Yeah. So you mentioned the end user demand. China was in buying SRW wheat this week, and do you anticipate we're going to see more China business? And what are you seeing, or what are we going to see in terms of this other end user business in the wheat market?
I'm hearing a lot from the Asian countries. They've been hand to mouth for the last 2 years. They let their internal stocks, drop. They realize now that things are tightening, so they're going to have to increase their purchasing. China's certainly not done. Soft red winter is still the cheapest wheat in the world. Soft white's not far behind. China bought the 4 soft red cargoes this week, but they also were rumors out of the Northwest that they either bought 2 cargoes of hard red spring or soft white wheat, we won't know till next week. But and I'm sure you're going to see more of that as we go. So
do you feel like we're finally at a price, Kevin, where we are competitive from a global standpoint?
oh, absolutely. Yeah, you're seeing the cash markets lead the way. They're leading the way higher. Our base has strengthened in hard red winter this week by 20 cents, as well as the board going up, at least here in the Northwest. That shows demand. White wheat's doing the same thing. So we're certainly at a price point that's going to bring demand. But what's really going to supercharge this market will be India. When India decides they're ready to import, that's going to kick us to a new notch. I don't know, with their election season coming up, I'm not sure they're going to wait and then come in and save the day. They're already experiencing very high prices domestically. Not a matter of if, but when. And I assume that month of November is probably when they're going to jump in.
Yeah. So at these prices, though, and with what we saw for the crop insurance guarantees in September, do you feel like farmers, do they want to plant wheat? Are they planting wheat? What are we going to see for acreage?
I think it's going to be the same as last year, if not down a little bit. Pretty much everything wins the acreage battle against wheat, so it's a rotation crop for anybody who can rotate something. Canola's a big one here in the Northwest as well as the North Plains. It won the acreage battle. Garbs won the acreage battle. Soybean won the acreage battle. Anywhere you go, so it's going to be unchanged from last year, in my opinion. And if you look at the world balance sheet going out, that's probably not the correct market signal that should have received. But we'll worry about that in a year. So.
Yeah. Soybeans, let's talk about that market because the charts do not look very good, do they?
No, it's got a pair of head and shoulders tops. It's got one on the daily it's not a textbook one, but it's there. I'm hoping we get some support soon. I mean, it's already sold off a lot. But the one that concerns me is the monthly continuation chart on soybeans. It looks just horrible. It's just a picture perfect head and shoulders top. And the good news I see in that market is we could rally back to $14, maybe even 14 and a half. And within that, if that chart is correct and within the constraints of that pattern, and give us another opportunity. I don't like the looks of that chart at all. It's going to take quite a move to get the funds away from the sell side on that market, despite what we think fundamentally. So
yeah, fundamentally, it's still tight ending stocks, but we've got problems with the river. We've got exports slowing down. That doesn't help, does it?
Nope. China's been pretty much absent this week. I think they only had one announcement this week for 165,000, and I was hoping I'd see something today, and we didn't see that as well. So they're sitting on their hands. I'm sure they see those charts as well, and so they're gonna try and work it lower too. So
yeah, I know they're on holiday. Maybe they'll buy some after they get done with that. Cattle market. Certainly, this could be the third lower weekly close here in the cattle market. Is that a concern?
Oh, it's always a concern when you have record prices and you sell off 3 weeks. It's scary and uncomfortable, and makes you check your hedges and what's your hedging program. The one thing to note on the chart, it looks exactly like the correction we had in June. Very similar structure. The other thing that provides some comfort is cattle typically don't make spike highs. They typically make kind of a long rounded top. And so even if the highs are made, we should get some more opportunities to sell some better numbers. I like what I'm seeing on the cash side. I like hearing some end users that are normally a couple months out trying to push for supplies right now. I like hearing that. It's still a strong market. And if the macros have any, if the jobs report was accurate, it's kind of hard to expect the consumer to back off that much yet. So
yeah, no doubt. We've kind of got this tug of war, don't we, between the supply bulls and the demand bears?
Oh, absolutely. The demand bears are always there. And
yeah.
I don't know what price point people really push back. To me, I don't know, beef's, it's going to stay, the demand's going to be strong. it's going to take much higher prices than this to really shut that completely off. And the supplies are, it's just not going to build fast enough. So I don't see this market collapsing. The stock market's not helping. But like I say, longer term, we should have some good opportunities in this market still.
Yeah, that's some good points you make there. All right, thanks for joining us. Kevin Duling with KD Investors, and that is Markets Now.